Right. Good evening. I love the new easy button. Thank you, Ryan, for that. I was dying. Or who was it? Yeah, it was Ryan. That was great. I'm dying about that one. Yeah, it was Ryan. Will, what's going on? Ugh. And there's poor Josh, or Josh's daughter. And I promised I would not pick on Josh just because Josh, he does not have Amazon Prime because it is too easy to purchase things, which I am in total agreement with. Once you start, you can't stop. Oh. Give you guys a couple more seconds to get logged in here. And sound should be fine. I On my second device, I just heard it and it sounded okay. But if you guys can't hear me, let me know. I can hear it pretty well. Excuse me. All right. Looks like you guys are a little bit delayed, but that's okay. So we will go ahead and get started. Update something over here real quick. There we go. My grandma becoming quite the technician. Oh yeah, Vic. Sound is good. Thank you, Jeff. All right. So, hold on. I have to do some call outs real quick. That's high at low. We are adding you to the milk carton. Hold on. There we go. There you go. I'm calling those guys out. Haven't seen either one of those two fools lately. All right. So now that we did our call outs, those guys haven't been in here for a bit, so we are going to call them out. Let them figure out. Again, like Ty's got a little one who's like one now, so probably into like everything. But I haven't seen Lou lately, so I'm gonna jump all over that boy. Figure out where the heck he's at. All right, so today, obviously, looking at the 24-hour pip changes, yes, pretty slow day. You can see the euro, the pound, were about the only two things that really provided much movement. Everything else, more or less, a retrace. Again, just wasn't moving. Again, didn't really expect much movement from those two. Obviously, you can see that the pound dollar and pound yen had some movement. There was a bunch of different kind of small news releases today. They mentioned the B word. You can see one of them here. UK companies would incur tariff costs after no deal Brexit survey. So again, a couple different things today talking about Brexit. Another guy down here asked, if he would extend his term if it was if it delayed again. So bunch of small little Brexit things, nothing super crazy. A lot of it, I think, we'll see how it goes into tomorrow morning. And again, a lot of this may be positioning. You guys can see, 24 hours ago, nice move, but then obviously we've had a bit of a retracement, right? In the last 60 minutes, you guys can see the solid red here for the pound. So again, we'll see prices coming back again, but you can see obviously the dollar yen, again, not much movement. Same thing across the board. Didn't expect much today, so it's not really necessarily letting me down at all. All right. So going into tomorrow is a big day. So make sure you are ready. So tomorrow, basically, like every 3 hours, every 2 hours tomorrow, there's some type of high impact news. So there's a lot of trading opportunity tomorrow. You're gonna have to pay extra special attention to your 4 hour zones and kind of your pops everywhere. Starting super early, and again, if I know you guys stay up late and you guys don't sleep, I get message. I see the messages coming in, or when I wake up in the morning at like 6:30, I'm like, oh my god, these guys were up all night talking. You guys better take advantage of pound CPI tonight. So that's actually a pretty good one for the pound. Again, anything at this point, the pound has gotten a little bit more, I guess, sensitive to news. Again, with all the drama and everything, people have been kind of waiting for like the pin to drop. So sleep is overrated. I highly disagree with that. Sleep is not highly overrated. Not sleeping is, that's the thing. I love sleep. Sleep is good. I just don't do a lot of it. But again, CPI, that's a good one this morning. Looking at it and analyzing it, you guys can see they do miss this one sometimes. Not all the time. I mean, going back, again, you guys can see here. This one, it's, they end up hitting it once or twice, and then they end up missing. So again, anytime you see the I in this, the inflation aspect of it, the inflation matters. Okay, anytime inflation is basically directly linked with how good a country's economy is going to do as far as lending goes. Okay, lending is kind of the lifeblood of business, and when you see inflation, again, they use interest rates to curb inflation. So anytime you see, again, a gauge or a leading indicator on inflation, it's definitely something that's important to be included. And again, at that time in the morning, the only other person trading is the euro. So again, you could trade euro pound. Obviously, again, euro is not going to be moving. You could trade pound yen, or you could trade pound dollar. So a couple different choices for that one early on. And actually, all three of those trade those made XY. So then we move into 8:30. 8:30, we get the same type of read on Canada. And again, we have common, medium, trim. Building permits doesn't really matter, but again, CPI is the important one there as well. And they don't hit that one as much. Then we go to 10:30 and we see oil. So the oil story should be interesting this week. As I said, I mentioned it yesterday. Like I said, I don't think the world is not going to end because 5% of its production is no longer there. Not super concerned about that. God, I don't know if any of you guys have seen DailyFX's new website. I am not really a fan of it whatsoever. But what is oil doing? What did I mention oil was going to do yesterday? It was going to retrace and head back down again. So what is it doing? It's at what, 58.87? It is retracing. Okay. As I said, mentioned it this morning, 5% of global production is really not that much. 5% is something that's easy. This morning, actually, I heard they were talking about different countries. All they have to do to produce more oil is turn the switch on. Okay, they have the capacity to do it, especially with oil prices being, $10 higher than they were the week before. Sure, it's easy to create that demand. In fact, I was actually reading an article today. I was I don't know if I had the link, I'd send it to you guys, but basically talked about if Saudi Arabia in total, right, 10% of the world's production, if they shut the entire thing off, that the other existing countries could I think they said within a matter of a week, they could basically turn things on and be able to completely replace Saudi Arabia as far as purchasing oil. It was a pretty interesting article saying that a lot of this is just so drummed up and really just has nothing to do with the overall market. I thought it was pretty interesting, but I think they said within 3 days. I wish I could find it now, but a buddy of mine sent it to me. I think they said within 3 days they could have 3 to 5% of the production could be online, and then like another 3 days after that they could have the other one. But I think it was within 10 days they could have that full 10% of the production kind of increase in the works and moving. Which I thought it was interesting that, Saudi Arabia is basically 10 days away from being replaced, right? I mean, pretty interesting. But yeah, so again, if you guys have seen the new website for DailyFX, it's completely optimized for mobile, which means it's not that great for desktop, okay? It's got drop downs. Whenever you hover a mouse anywhere like halfway across the screen, all kinds of pop-up windows just happen because it's all based off of like mobile, right? It's not fun anymore, unfortunately, to go to. I was looking at it today. I was like, I can't go anywhere without this gigantic window popping up on me. I can't see much. He ain't wrong. Timing is critical. I had a weekly Natix retrace. I already hit profit. Yeah. I mean, what did it do? I mean, it was up to like what, 62, 61, 62, and it's already back down to 58. So it's rolling the other direction. I thought it would take about a week for it to kind of go back down. But at this point, I mean, with the oil numbers tomorrow, think about it. If we have any type of, kind of big, we have a decent sized miss, we could drop another $1 tomorrow and be back down to the 57, 56 range, which is just slightly above where we were. So they say we'll be back by the end of the month. Yeah, they'll be back to, here's the thing. When you read that, okay, they said they'll be back to full production by the end of the month, but they say that to keep the oil price higher. They'll be back to full production, I guarantee, by the end of this week, or within 75% of full production. Okay, they're not going to miss, trust me, they are not going to miss out on that money. There's no way. It's just too good. It's just too good. All right, so that brings us into 10:30 tomorrow morning. All right, which makes things pretty interesting. Then we have our FOMC, and then we're expected to have a 0.25 rate cut tomorrow. Okay. Now again, the market has factored in a 0.25 rate cut. So again, when you see that, it's probably going to move because people are going to react to it. People that don't know how to look at things like Forex Factory, and they're going to be like, "Woo!" Again, market's ready for it, but it's having forecasted it and having it be 100% true are two separate things. Tomorrow will be the final confirmation of it, and there'll be enough retail traders that are like, "Oh, that's a big deal." Now, obviously, when you cut, they cut the interest rate, that weakens the dollar. Now, that should be factored in most cases at this point, but again, it's still important to understand. And again, I really don't think there'll be a surprise. I'm pretty sure they're going to cut. I don't think they'll leave it. I really don't think they're going to do a 0.5 cut, although people I'm sure would love that one. But I do feel it is important to note that, again, the president is calling for going to zero interest rates. So, again, I don't think last time when they lowered the interest rates, they basically kind of made a comment about how, this is not a cycle we're about to get started on, except if X, Y, and Z happens. And Trump made X, Y, and Z happen the next day. Honestly, now that we're kind of coming to the end of the trade war, right? I mean, I guess there's no agreements officially in place, but I mean, they've been invited, they're coming early, then there's the final one, and with elections coming up, I mean, if there's no trade war and there's no terror, I mean, the tariffs have been basically putting it on hold. I mean, if there's no trade war, why would we not have, growth is normal? I don't see why necessarily we'd have a recession, why we'd have to, we'd go back to, all the problems on the market right now are basically because of the trade war. So I don't know. I don't think the Fed is going to go overly crazy on this one. I think they're going to, see if they can, slow ride this one, be like, yeah, we'll drop it 0.25 and that's it. And then we'll kind of see, what's going to happen. Because I'm pretty sure they can see through kind of what's happening as well. And then again, 2:30 is where the press conference comes in. That's where some of the statements and kind of some of the questions will kind of pop in, and we'll kind of see, how pointed some of these questions are going to be and what the responses are. You get that uncanny response, and that's what sends the market going crazy. Then tomorrow night at 6:45, okay? Again, this is not a Nadex pair, but it's GDP. GDP is a big number, okay? GDP is one of the top 3 movers of any currency pair, particularly in a country like New Zealand. So, again, we're going to make sure that we look at our 4-hour zones on that one, see where we are with our pops and drops, okay? Pairs you can trade that one with, obviously, are going to be Aussie, New Zealand, which, again, be a little bit cautious because Aussie has news later in the day. You can trade, New Zealand dollar. It has the potential to move 40 to 50 pips on that one with a good miss. And then, again, New Zealand yen. Not a heavily traded pair, but it is a pair that exists. It does trade, one not heavily traded pair against a weak pair in the yen. So, that's a trading possibility that you will look at. And again, we'll break the New Zealand down to see kind of where we could get pops to. And then 9:30 tomorrow night, right in the middle of chart school, bam, we have the unemployment change in the unemployment rate, basically the non-farm payroll of the Aussie dollar. Again, can be a big mover. Now, this one is a little bit different than ours. Obviously, ours we talk about 150,000 jobs and things. This one, obviously, we're talking about much less. You guys can see last time it was forecast for 14, and it came in at 41. So it was a huge miss. And again, for the most part, when they miss, it's a lot closer, right? But again, they're forecasting about 15 again. If that continues on the same path, that's pretty good. And again, if we do go on the same path again, another 41, that's a lot more jobs than they expect. That's where you start to see this number get messed around with. Okay, and if you see this one drop down to like a 5.1, that's where you'll definitely see some movement in the Aussie. Okay, in particular, the Aussie yen I think will be the big mover of this one. Again, that'll be the first pair we look at. We'll break it down, and that could be, again, that'll be right in the middle of chart school. So we'll kind of set it up tonight, and then tomorrow we'll have the kind of ability to kind of just readjust things before news and see how it goes, and we'll see if we can find a Nadex contract to take that one out. All right. Let's see. It has more to do with OPEC theory than with the actual product itself. There's enough oil out there that for the next 10. Yeah. I don't know that there's. So here's the thing about that, Vic. So a friend of mine who used to be an oil trader, he actually did it not only in the pits, but actually for some of the banks. And actually, I guess I don't remember if I don't know if it was the airlines that he got involved with or not, but he was part of the kind of the hedging group for oil. And what he said was, basically the International kind of Oil Commission, not OPEC, but the actual kind of, there is an energy board. They require all oil wells to take inventory. And I guess it's kind of like a dipstick method. There's a couple different ways to figure out how much inventory still exists under the ground. Well, Saudi Arabia keeps giving the same exact number, and they've been doing it since I think like the early 80s, and have never showed a reduction in what the capacity of their oil is under the ground. So it's kind of interesting where, if you believe what OPEC's totals are, then yes, they have enough oil for 100 years. But with the amount of oil that's been pumped out over the last, 30 years at this point, to say that their volume has not decreased at all is absolutely 100% false. There's just absolutely no way. They were lying either then or they were lying now. But either way, you shouldn't believe them. I think they're trying to get every last penny they can out of it before they run out. And then one day they're just going to say, "Hey, by the way, we're almost out." But again, they're trying to milk it for all it's worth. Is kind of what the opinion is. Now, the thing that hurts them, and again, in oil in general, yes, you are absolutely correct. There are so many people pumping oil right now because, again, their greed when it drove up to $100 a barrel, it stimulated the economy for everybody else to come out there and start producing it themselves. So yes, there are a million nations out there right now that are producing oil that could produce even more if we wanted to. With different pipelines, we could ship it here. There's different technologies you can use it, whether you believe in those technologies or not. There's a lot of it out there. Okay, and again, that's also kind of halting further progress. But again, the higher this thing goes, the faster the kind of adoption of a new technology will actually occur. All the technology is already currently there to replace oil. We don't necessarily need it especially the extent that we do right now. I mean, again, we will have to. A lot of people think oil and they automatically think gas. There's a lot of other industrial uses for oil products, but a lot of those are also starting to be replaced, and that's become a kind of a big deal. But it's definitely not the OPEC is definitely not the I don't know. For lack of a better word, and again, I don't want to offend anybody with this one. They used to be like the mafia. They were totally extorting everybody in the world. Unfortunately, their greed has forced so much adaptation at this point that they no longer have that same control, right? They can't shut down. They can say tomorrow that fine, you know what? We don't like you anymore. We're not going to send you any more oil, and someone else will say, okay, you can have ours. So it's a very different environment. The supply and demand kind of balancing of this one is definitely kind of taking over. When that demand was super, super high and the price went very, very high, people created infrastructure to make it themselves. And we also saw technology to replace it. And again, a lot of things have been put in the works. Okay. There are people that don't, I mean, again, if you look at most of like city, like buses and things like that, most cities at this point have all adopted natural gas as a better option. Could be more than if it was actually cruise missiles. If it was I don't know. I mean, it was a drone. I mean, I don't know. Drones pretty. Honestly, if a cruise missile hits something, it's kind of one of those things. It's like, yeah, that's what its job is supposed to do. I mean, it's supposed to travel 50 miles or whatever. Low, avoidance radar. That's what it's designed to do. But a drone, I mean, I can have a drone. You can have a drone. We can all have drones. I don't know if you guys saw. I posted it today. My YouTube thumbnail from the Nitix presentation yesterday. It says when drones attack, and it's obviously it's a photo drone. It's not like a war drone that's dropping anything. But I thought it was pretty funny. I was like, yeah, it's not these kinds of drones, but you know what I mean. All right. So again, that's our news picture for tomorrow. There's a lot of stuff going on, and again, tentatively, you also have Japan giving their monetary policy statement. Not as important with Japan. Nobody expects Japan to raise interest rates, so it's not really like a big deal. Japan is completely happy with having theirs be the cheapie out there. Again, it suits them perfectly as an export nation. They do not want their currency to strengthen whatsoever. They want to keep it as absolutely as weak as possible. So again, it's tentative. It's not you're not going to trade against the yen. The yen is not one of those pairs that you're going to trade against. All right. All right. So let's jump over into the IG charts. There we go. All right. So as you guys can see, we talked about this last night. This is an artificial candle. Actually, I don't know. It's all starting to meld together. Tuesday nights is always a little rough. I don't know if I drew. Oh no, I didn't use this morning. I used the Ninja. So yes, this was last night. So I drew that candle. As you can see, we kind of came back up to the same exact area where we were. This candle right here, you can see we're at 21. If we go back and look, 21 is right here. So we're kind of in the same area that where we were last night. Yes, we had a drop. It went right to this black line, which is an area of basing, which we thought. It kind of came across and then went back up again. Now, had you drawn this as kind of, you could have drawn this as an area where we had a large movement of price based off, coming off that. There is 3 candles. There is a single wick against the wall. All these things are true. It is about a 10, if I duplicate this, you guys can see. You could have put a trade in something like this, to the downside. And again, not necessarily a bad trade, but just understand we are kind of in a sideways kind of grinding motion, right? We are moving sideways on the daily, as you can see. Yesterday, we did have a true, technically it's screwed up because of the gap, but again, we did have a true, true green, true red, then a true green. Looking at the 4-hour, you can see we're kind of bumping around this zone. Now, we are getting close. We haven't quite hit it yet. Again, the red line is kind of the trigger to start looking at this one that it's approaching the gap. We're not quite there, but again, large movement down in price, pop up sideways. Again, with the extended range candle, we could kind of stretch it this way. You can say, hey, isn't there a retest? Yes, there is. Okay. I'll remove it from here and I'll draw it up on this one so you guys can see it. But you could technically draw that as a zone. And it's exactly the same, right? But minus the fact that it's green. Sorry. Bam. There. Okay. It's about 7 pips. So it's not necessarily 10. It's even less. That's a trade you could have taken. Now, let me do it this way. See, there's a key to drawing these things. There we go. Okay, it's 8.6. Okay, again, it depends on what side. Now, this is one thing I do wish IG was capable of. I wish I could click on this, and I wish I could change this about where what data it gives you and where it goes. Okay, I'd like it over here in the open, not covering something else. But it's about 8, right? Again, your target would probably be down here. If you want to be a little bit conservative, yeah, you could probably bounce it to there just to be on the safe side, but it's probably not bad. Even, again, there's a single wick there. It's not horrible. Let's see. What would that be to the downside? Yeah, it's just under 3-to-1 risk to reward. If you kind of put it to the bottom of that candle, that bottom of the wick, you can grab your 24 out of it. 24 would be right about there. Again, that's, you guys can see it's right, kind of right in the middle, right, to the downside. Not a horrible trade setup. Again, in Nadex, I'll be a little bit more cautious with this one. Unfortunately, if you use a daily, we're only talking about 2 strike prices away. 2 strikes away is not that much, particularly for a smaller pair. If this was tomorrow night and we had news in 8 minutes, then that would be an entirely different story. Then I'd be like, yeah, we're in an area right now. If this thing kind of shoots, it drops quick, you're right there. But right now, we don't have the catalyst necessarily tonight for an overnight. So this would be something I'd take most likely inside of inside of the forex market, I think. But again, same area, same, nothing has really changed in this one. Still sitting up there, still looking to overtake this area, still looking to come back down to 7140-ish area. I'd like it to break through. Hopefully we can break through this. If you guys are setting your target based off of the 4-hour, your target will be right there, that's where your 3-to-1 risk to reward ratio is. Okay, the downside. Now looking at Aussie New Zealand. Again, this is one of the news pairs that you have the potential of playing tomorrow. Now, you guys can see this one did come up, it did grab, and then it did go lower. So we were waiting yesterday. Again, here we are right now at 21, and actually 21, we were right here coming out the other side. So we were in that zone yesterday. Had you taken this, you got a little bit of movement to the downside, not a ton. Without any catalyst, wasn't surprised that this one didn't move crazy far or anything. Oops, no, not that one. Was looking for this one. Okay. Looks like the peak, you moved about 28, not even 30. And again, you still be positive in the position right now, about 17 pips. I think originally when we set this one up, we had talked about this level of basing and, again, smaller trade. You could have set something up like this one where, basically this was your risk level. We had seen a little bit of a pullback there and then had a profit target of, right about where it turned. You may or may not gotten stopped out again where this red is right here. It did go lower and tagged you over here. So, I mean, this is one of the options you could have taken off of last night as it left that zone. Okay. So again, there, I actually like the movement better in the other 2 pairs. This one is not always my favorite, but you had the ability to take that again based off the basing level, finally continued to collapse to the downside. So still longer term, I'm looking for it to come back. Again, it did have the nice bounce off. So had you taken this kind of break of the zone retest up again, I liked how we drew that the other day, talking about white space underneath. When you can put the, triangle under, then it's valid, right? That triangle shows us that there's a momentum breakout to the top side. And it did. Where did it go? It went exactly to the daily zone like we were worried about. And and it turned and flipped and then came back down again. So had you placed that, again, that would have been again, here, up, and over. Now it's just kind of retesting and retracing to the bottom. And again, look at the 30-minute, you can see really from 5 a.m. this morning until about, 4 this afternoon, we've really got absolutely no movement whatsoever. And again, no news release, no catalyst. Movement will go to where it's supposed to go. It'll just do it a lot slower. All right. Can't force that, right? Going into Aussie dollar. You guys can see very, very similar. Now, this is when I was like, Ernest, I'll appreciate this one. Okay, here's the bottom. Right there. And you guys can see. So there was the target that you guys saw me talking about, right? It's like, oh, it's so close, right? Here we are right now at 21. And here we are at 21, right here, right at the bottom, breaking through this one. So how mad am I? I'm like, oh, it's right there. It's right there. Touch it. And it didn't touch it. It kept going up and went rallied right back again. So it is what it is. I want this target to hit so bad. It's so close. It's just right there. It's just, in the words of Ernest, it's the pipettes, right? Look at that. It's like, oh, like we had that yellow line drawn at the very bottom level of that. Just hit it already. And again, you guys can see we did retrace all the way back up again. Okay, there was the level of basing. We had a drop, a sideways, and a drop. It came back up, and it actually didn't. It made it just slightly higher. And again, if I draw the box, you guys can see here's where the initiation of the entire move started. Okay, and it has now since started to pull back again. Now, Ernest, you traded this one today. I'm pretty sure. I think this is the one that you got out on it. I think it was you that posted this one earlier. You guys can see a lot of movement very quick right after chart school last night, faster than I actually thought it was going to be. Again, my target was down here. I did not hit my target. Yes, I am a little bit bitter about that one, but we came back up. There was a bit of a reentry, and it's a very small reentry. I think this zone, yeah, you're talking about like a 5-pip zone here, and it's already moved, 2-to-1 risk to reward ratio to the downside. It's actually gotten just a tad lower now than the basing zone. If you were taking something small like this, again, I'd have my target somewhere down in here. Okay, I do like the way this form. This is an extended range, large extended range candle. You're talking about what? About 26 in one candle. Again, there was one to the downside, but very fast retracement to the top side. If you take the true average range, or the average true range during this time period, the ATR is 15. Okay, so this candle being 26, it is definitely over 1.5 times the ATR. So it is in line for a racetrack retrace. Okay, it just had to go all the way back up. So it ended up popping, coming to the side, tagged this 30-minute zone, and is now flipped. You took a little bit of heat in there had you entered on the first one here. But again, it left the area. It came up and retested, so this is where you could have gotten in. Okay, I don't know if you guys can see that or not. Let me drop it down to a 10 minutes, see if it gives you a little bit clearer of a picture. There you go. Okay. Again, had you entered here on this first time, you could have gotten in and said, okay, great, I'm taking heat. I don't like this. Again, down, up, and then down. Okay, and this also gives a little bit clearer of a picture as far as the target goes. We've just passed this area, which is great. You guys can see the dark line coming across. We do have a single wick here on the 10-minute, which is it may bother us a little bit, but I think we're going to end up pushing back down, at least here to the ascending wicks, and then probably flaunting around with this bottom section. Yeah, Aussie was a quick trade for you today. Yeah, I thought you got into that one. All right. So a lot of smaller time zone stuff. So even though Aussie dollar has moved -3 in that time frame, you guys can see it was down, up, retested, and then back down again. So looking at big picture on the daily, you're like, man, nothing happened today, but it actually did. There was movement to the downside on this one. There was basing, and then it basically retraced back up just in time for chart school at night. It knew that we were going to talk about it, and that's kind of what we've been seeing in the markets. You're seeing moves in the Asian session, and then you're seeing or they're basing and then a retracement in the US session or vice versa. You're seeing Asian session moves, London session moves back, and then it flatlines inside of the US session. Between the 3 sessions, it seems like we have one base, one up, one down, pretty much every day right now, as far as what we're seeing. Okay. Looking at Pound Aussie. Yeah, Pound Aussie, it didn't have the same retracement effect. Like I said, this one was getting pretty ugly. It came above, it went below, it came back up, and now it's kind of turning sideways and kind of rolling all over the place. So we had this nice sideways channel that we were respecting, up, down, up, down, up. Kind of came over, retraced back up, and then now it's kind of stuck on this upper zone. As you can see, you guys see the blue up here. It did go a bit higher. It is basing right now in that higher zone. Again, that was generated from this single wick against this candle, these 2 candles here. But it's starting to get really, really sloppy. I probably, because of the wicks in all these bases right now, not a huge fan of this one, even though we are at kind of the top of the channel. I'm probably going to wait and see. This one is a potential for tomorrow if it breaks free a little bit. And again, where it's holding right now, if we enter news tomorrow with it stuck in this upper channel, it could be one of those things that we're looking for a short before news or potentially after news, getting some type of move. Now, again, not a Nadex pair, so you'd be taking this one in currencies. Your risk level is going to be a little bit higher. The spread will also widen a little bit right beforehand. So just be cautious about that. Again, we'll discuss that one tomorrow. Looking at Euro Pound. What happened? Nothing. So again, we had the nice little retrace. Price went back down again, popped up, dropped again, fast again. Um, it just hasn't moved, right? We had this kind of nice little bounce. We came up, we grabbed more orders, we pushed back down again, nice move, and then it based, then kind of came over and popped and did it again. So looking at the daily is giving us kind of a true indication of this one. We are seeing wicks up and down and very, very small body. So right now it's kind of stuck in a holding pattern. Tomorrow with CPI, we will get movement out of this pair. It is a large enough news release that we should kind of break free of the kind of sideways movement that we have here. We are at the lower end, obviously, of the curve. I mean, this is obviously a near-term low, right? I mean, if we zoom it back, you can see that this is technically where we are, right? This would be the low. This is the high. We're breaking into the middle, kind of no man's land. But we have had some nice pushing, and one of the nice things about this, as you guys can see, this has come up once and it's come up twice. So it's hit this area kind of two different times and had a very strong reaction both times. So it's nice to know that we have sellers above. Now, with that being said, if the next few hours we can grind up and 4:30 before that release, we are sitting up in that zone. Not a bad place to take this short. And again, if we just kind of meander around and price pops because of the news into that zone, we also know that this wick over wick has already shown us twice that it's going to shoot the price down again. Okay, now again, it went up and grabbed this top zone. This one didn't even make it as high. This little pop up and then was immediately pushed back down again. So we definitely know there's some sellers here, and again, some sellers sitting in this area. We still would love to see this kind of completion of this Harry Potter to the downside. Again, there's no target; it's just drawn that way. But again, we were looking more for this kind of V. I'm sorry, the V basically here, but the triangle is what we're looking for inside of those zones. This one was obviously able to do it. Now, looking on a daily, okay, you guys can see what we're running into to the downside. Like I said, gets pretty wicky, pretty grindy. It's a lot of pullbacks, a little gap over here, a lot of kind of wick against a wall. So a lot of kind of not the smoothest road, right? It's not like this. A lot of just boom, 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 boom. Lot of bumps on this one. This is one of those older roads that they've kind of chipped the ice out of it. So that's kind of what we're in for, is a bit of a grind back and forth. I'd almost really like some type of a spike in this one just to clear the stuff out faster. I think it can make it through. I think we can definitely go lower. I mean, where we are right now in price, what are we at? 88.63. I definitely think we can get a bit lower in this one with any type of good, pound news tomorrow. I don't think the euro is strong. I am a believer in the fact that the euro is probably the weaker of these two pairs, especially when the UK can get their act together. Which that may be asking for a lot, but if they can get their act together, again, that could definitely drive this to the downside. All right, so still bearish in this pair. Zone, I'm still holding as the top one. Still holding. Watching this wick over wick. That's the one that still matters to me the most right now. Okay. Looking at Euro Pound. Euro Pound will not have the same reaction tonight. It won't be necessarily the biggest mover off of that CPI news. Now, this pair has gone back up and it is sitting in the gap. Okay, so here's the 30-minute gap area. If we draw this, you guys can see this is typically what we're looking for. We want the gap to refill. Well, it has refilled at this point. Okay, so we are somewhat in an area where we are looking to go short. Okay, that zone up top is about 13 pips, so it's not a horrible pop, right? 13 pips, and then to the downside, we are looking at something along this line, I'd say, probably, right? That's probably the safest way to do it. It's probably right there. Those three candles are not really super impressive, but something along this line is what I'd be looking for in this move. Now, it did spend a lot of time there on Friday. It has spent quite a bit of time there today. We haven't had the catalysts. Now, this is where the big if. So the market is already priced in. We know that the the dollar is going to be cut in rates. Okay. I don't know if this thing can hold for another, I don't know that it can hold for 18 hours inside of this same spot. I feel like we are going to get some movement to the downside. So I do feel like we have the ability to kind of go lower. Now, areas that I'm watching for on this one, okay? This zone down here, even though there's this little bit of a pop, this basing right here, these are the areas I'm looking for tomorrow. Because again, with rates changing, it is going to affect the yen, okay? Obviously, when rates go lower, it is better for the stock market. The stock market will be happy that rates are being cut, and again, it will affect the yen and most likely provide some strength to it. I'm kind of looking at this, and again, descending wicks up here. We're kind of looking at this as our two zones on the 4-hour. Now, obviously, we are sitting in the top side of this one. Apply. So those are kind of two areas that I'm looking for on the 4-hour. As far as where we could kind of bounce back and forth. Let's see. Top to bottom, you're looking at about 83 pips, which would make sense. The ATR on this pair is about 83. So it's one ATR to the downside right now of where we could potentially go. And again, this would be a dollar play running through the yen for tomorrow. Will it have time to move that far? 44 pips? Yeah, it absolutely could move that till, from now till then. Obviously, there's no European news overnight. European, they don't have their own news really for the most part. So it's not like you have to worry about that. So again, it is in an uptrend. You guys can see that as well. Remove this candle. This one is engulfed, but again, it's in an uptrend. We expected that. It's not all the way up is the problem. I'd like it, again, ideally, again, this was our trigger point, our alert at 120.20. This is the start of the move up top. We didn't quite make it that far. So there's a pop sitting right above where we are, but I don't know that we'll necessarily make it there. If you're looking at the intermediate and the small time frame, we are kind of in a zone right now looking for this to turn and flip to the downside. And again, 13 pips risk is very small. 44 pip movement. It'd probably be more of a Euro Open trade if you're going to do something smaller, but I don't know that I would necessarily take a 2-hour without any type of catalyst from now till then. Okay. This may be a case, and I don't even know. Let me see. Let me check something real quick here. Bring Nadex up on another window. Come on, you can load. I have so many windows up right now. It's unbelievable. Let's see. All right, so the indicative value right now is sitting at 119.72. So here is a trade for you. Here, I'm gonna drag something in here for you guys. Let's see. What about something like that? Oops. Okay. This may be one way to play that. Okay. We are sitting in a zone. Obviously, we have, 13 pips risk inside of the spot currency realm. I don't know if you guys can see this or not. Let me blow this a little bit bigger. Okay. You guys can see right here. Indicative price is 119.72. There's a 3 p.m. daily, and again, the ceiling is 119.70. So we are slightly above, but again, max is 22. I'm sorry. Maximum loss is 22. Maximum profit is 128. Now, again, this can move. It is a spread, so we do need to make up some room on this one. It does have the ability to kind of move down to the far side. So, again, that could be one way we play it. Again, gives you a little bit more time. It's got about 17 hours. You could take advantage of movement overnight. You could potentially double your money on this one. Again, binaries, unfortunately, I think are going to be a bit more on this one. If we go across and I'm going to take the same type risk on this one. Yeah, it's going to require a lot more movement to the downside. I think it's going to be too much. Yeah, it's not. Even that's 30 pips to get kind of the same profit on that one. You do better on the spread. But again, this is kind of one of those ways that you can use a spread if you needed to. And again, we don't really get spreads that match up too often, but this is one potential spread that you could throw into that one. Wouldn't necessarily be, something bad. Keep your risk small on that one. All right, let's go across to euro dollar. All right, so euro dollar. Was it done? Obviously, we had the pop down, we had the basing, we had the trigger point off of, again, what did it bounce off of? Wick over wick right here. Okay, we talked about this before. Here's your wick over wick. That's what it based off of, and has gone all the way back and rallied right back up to the top. So, being the fact that it is now back up at the top section, again, it completed its retracement. Again, you could potentially be looking for shorts on this one. There is no confirmation. There's no red, green, red. We just kind of had one, but it's not one that I would really be real cautious with it. You guys can see, yes, there's a red, there's a green, and there's a red right here, but it's basically just a flat doji. It didn't really move. There's no kind of momentum. The zone that would be bouncing off of would probably be like this, but it's not the best, not the best top. Okay, but it is there. I mean, it is a potential area. It is a potential flip. It has just given you confirmation. So there is kind of all the things that you would need, again, to retrace this to the downside. There is one single here, again, that you do need to be a little bit cautious about. Looking on the lower time frame, you can see that's right here. Make this a little bit bigger so you guys can see it. That's this piece right here, right? This, it's all this junk right in here. Okay, and again, why I don't like it is because, again, it's all wick and very, very tiny little body. Okay, so just, something, hold on one sec, guys. I'm going to sneeze and I don't want to do it in the microphone. Or maybe I won't. It was right there, and I was like, "Oh my god, I'm gonna sneeze. It's coming. No, it's not gonna come." It's one of those things. But again, be cautious about that. Again, not on the small time frame. It doesn't look like it's a lot. It is a single wick. Wasn't the best formation, but again, very very small risk on the top side to take this down. For me, again, there's never really a big point where you're saying, "Hey, listen, price is taking off." Mine is down here. You could say that there would be your potential profit target. Why? Because again, that's the bottom, that's the flip. That's really the only explosive move that we have, right? A little bit of basing. This is not an explosive move up and out. So looking for risk up top. Again, this would be a retracement back to the downside, taking kind of something along those lines, right? Change that to green. All right, and again, because we're on the upper end of the curve. Technically speaking, on the daily, again, if we erase the green, that's the action candle, or the action. Yes, the action. Look at the anchor. The anchor is completely engulfed, but it's engulfed inside of a candle over here that has like this super wick down to the downside. So it's kind of sketchy. Again, like I said, I hate when there's these huge long wicks. It typically messes up the analysis a bit. So we are technically sideways, and again, we are technically an uptrend, but again, on the 4-hour, we're going into a nice little area here. This was a definitely nice push. A little bit of a pullback, and this is an explosive move off. So these are typically high quality turning points when you see that large explosiveness of a candle bouncing off. Okay, you like it when it's on all three, but again, this is a situation that's not bad. Now you may say, wait a second, but didn't you say that by the interest rate going down that weakens the dollar? Yeah, it does, but everybody knows that. So that's typically a lot of times you got to see when the market is already kind of planned for it, and then people say, hey, wait a second, they just cut the interest rate. That means the dollar should be getting weak. That means the euro is going to go up. A lot of times you see the opposite reaction. It goes in the other direction, unless the language is there, because people know what it's supposed to do, right? And that's what will cause that reaction to the downside. That will be affected by FOMC. Yeah, basically all these will be. Yen will be affected by the FOMC because FOMC will affect the stock market. Okay. And again, obviously the euro dollar will, because again, interest rates directly affect the dollar. And again, if we were like talking about, the interest rate up at like 3 and, it wouldn't be a big deal. But right now where we are, because everybody's so worried about recession and, are we going into the recession? How bad is it going to be? What's the economy look like? People are super hyper focused right now on the stock market. And cutting interest rates, it will only help the stock market more, make it go up in the air. Okay. So that would be your setup for the euro dollar. Looking at euro Aussie. Kind of the same scenario, right? I would not probably play Euro Aussie as much. The one thing that this will be exposed to is if people are unhappy with the FOMC, or any of the CPI numbers we see are showing inflation. Obviously, as soon as we talk Aussie, we're talking about gold as well. So this will also have a bit of a gold play in it. And again, interest rates affect bonds directly. Bonds are, again, whenever you hear about bonds, you start thinking long-term assets. People throw gold in there as well. So this one may be a little bit more erratic tomorrow. I'd probably wait, if you're going to play this one, Euro Aussie, trade this one tomorrow night for the Aussie news release. I wouldn't focus on this one tomorrow with kind of all the news that's happening. Like I said, FOMC probably won't affect this one too much. But if you're doing it on a purely technical setup, we are in an uptrend. We are getting ready to approach an area where we have sellers. We are in that area. And again, it's already pushed through the top, so it's not the strongest zone. This is attempt number 4 through it. You guys can see Very, very high descending wicks. It's already been here before once, though. It's already kind of burst through. So be cautious. Yes, I am a bit more bearish on this one. We are kind of pulling to that side. But I think if at any time if it was going to crack, this could potentially be it. Again, you guys can see we had a touch here, a touch here, a touch here. This one went through right number 4, and then we kind of came to the bottom side. It came through, touched, went all the way to the bottom, and again, up, pull back, and went through. So this area has been kind of chopped from both sides. So I wouldn't necessarily rate this one very high. It'd be a very low ranking for me as far as expecting to kind of hold and give us any true direction. And looking on the 30-minute, you can see, I mean, it did nothing here. It just literally rode this kind of profit target, drove back up, and then it's just been stuck. And it's spent half a day, almost a day at this level. Okay, so not really anything that's driving. Need to get a little bit more trend coming out of this one. Looking at pound yen. So pound yen is definitely something without a doubt you guys could play this morning for that CPI release at in the morning. Again, this one has come up and it has actually gone above where its gap was. Okay, its gap level was right in here around 135.06. Okay, again, nice pop up, had nice movement today, and now we're kind of sitting at a peak. Now, with that being said, you guys can see, yes, this is a pretty extended range candle here. The ATR on the 4-hour is sitting right around, whoops, there we go. Where are we at? About 45, 47. And again, you guys can see it pops in different bursts, but it's about 47 right now. And that candle right there was 108. So even though, the ATR came down, even if you take it from a peak, the peak is still 51. It's still over basically 2 times what the ATR is. So we're definitely looking for any type of retracement in this one to the downside. On the 30-minute, you can see we kind of got it. Again, you may have gotten in, had the potential to get in, but again, it really hasn't left the area with any true oomph at this point. And again, you're basically taking it off a reversal in the middle of nowhere. I mean, it's going into what you would call it, basically a daily reversal. It's kind of this wick right here. Actually, this is right here, right? It's this zone. But again, it's already hit at one time. It drove deep into it. It gapped back down again and then pushed back up again. So it is a little bit trickier of a play because we did have the gap to the downside on this one. I do like this bearish. I am definitely more bearish this pair. In analyzing the CPI number, I think it's setting up to where it does look like it wants to go to the downside. In a couple different pairs, it wants to kind of give us a little bit of weakness. So entry though, going to be a little bit difficult. Let me see real quick why I have Nadex up in the other chart. Let me see. What do we have? Let me see something real quick here. 135.10. All right, so this is another one. And the risk on this one's a little bit more. It's about 35 because they know the CPI is coming. We are also right at the ceiling strike price of this as well, which again, we don't get too often, but it's actually sitting at the spread top right now. Looking at it on a binary standpoint, though, I'm trying to see. Let's see. We're at 135.11 right now. Let's see. 135. It's about 60. Something along this line, 134.40. So you're talking about 40 pips. I'm sorry, not 40 pips. About 60 to 70 pips. Obviously, the ATR is much higher than that. Okay. If you're looking to take advantage of that early move. So something like this, you guys could get in pretty cheap at 16, right? If price gets back down to, let's see, I'll draw the strike on here. What is it? What did I say? 134. 134.40. 134.40 is right there. Okay, let's change this to purple so you guys can see it. Bam. So it's basically right down here. It's the start of this move. Okay. Could it take this over in again, that gives us till, what was I doing the expiration by? 11 a.m. Okay, that gets us right into the kind of the US Open tomorrow. Not a bad kind of little, attempt this one if the news is good. What are you looking for? It's about a 70 pip move. Okay, so I mean, again, it can do that. If you wanted to extend this one out, you could, let's see, go down to the 3 p.m. and let's see what we got it for 3 p.m. Yeah, not too much. It's basically $2 more that you could risk on that one. And again, would you need to make it the entire 70? No. Just with the volatility, you could get this one out for, 2-3 times this one. Well, 2 times would put us around 36. But yeah, you could probably get this one for 40-50 bucks to the downside. Small risk, little 2-to-1 risk to reward ratio trade. May not be a bad little attempt on that one. Okay. Again, with CPI. And that takes advantage of this. All right. And again, if you want to include some of the other stuff in here, sure, why not? Right? If you do the 3 p.m. on that one, you also will include the FOMC notes, which at the same time, remember, if they cut that, that's good for the stock market. You should see the yen kind of rally from that because it will also help them. And then again, that could also potentially shoot this to the downside. Okay, so a couple different factors on that one that you could potentially set up. That's all I got on that one. Again, not really looking for any long targets on this one. We got to chunk through this, and we got to chunk through this level of basing, really. I don't know that CPI can be that good. I don't think CPI is taking us all the way up. I mean, if it could make it up here, that would be a 200 pip move on CPI. That's quite a large miss. Can it do it? Sure, but is it most likely to do it? 200 is a lot with what we have going on in the market right now, especially with everything that we have going on tomorrow. Okay, looking at pound dollar. Let's see what we got here. All right, so pound dollar had that bit of a retest, right, or retracement. We ended up hitting the profit target at the pullback here and then went back up. And what did we do? We hit the very, very top section, right? So we talked about that before. We had a golden line there. That golden line was really kind of letting us know when we were getting, again, this was a clean level of basing, and there was a level on top of a level. But it's the last time we really saw a true pop sideways and then kind of price come down. And again, price touch it here, and was turned away both times. And again, it did the exact same thing this time. It turned it away. We've moved from 125.22 down to 124.86. So we've already moved about 30 pips back to the downside in this pair. And again, you guys can see, looking at the 4-hour, right? What do? Large movement down, boom, straight up price. Again, retest target. If anybody got into this one, this is where you would have done it, right? So we see this large extended range move. Here's where we turned. We're looking at, here's our red, green, red. And again, maybe a little bit high. This is about 25 pips. The potential target back down to the start of the move is about 91. So it is over a 3-to-1 risk to reward ratio back to the downside. 25 may be a little bit much, though, for some of you to be able to jump back into. But that would have been the confirmation entry in this one. And again, you took almost no heat in this one whatsoever. Right now, you would be up from that confirmation entry, up about 18 pips. And it looks like right now it's kind of stuck in this little bit of a basing zone. So that was off that retracement to the downside. And again, this also lines up with what we saw in some of the other yen or the other pound pairs. They all are kind of on the upper end of the range. They all look like they're hitting zones from prior days. All of these signify, basically dollar strength kind of pushing to the downside for those moves to all occur. All right. Yeah, it's same trade, just different pairs. Okay, so we'll see. I don't know that this one will grind all the way down before FOMC, but this pair will obviously, this is definitely a pair that will be moving with FOMC tomorrow. As I said before, the pound is kind of in a, I wouldn't say weakened state, but I would say it's in somewhat of a more precarious position right now. It's not its typical, it doesn't have its typical strength right now. Okay. Looking at pound New Zealand, again, pound New Zealand will be a big mover, but again, no natives for this one. You have to be prepared to be able to take a position that's going to move on you. This pair will definitely move on you. Oh, there we go. I broke it. Load up. Load up. It didn't want me to switch. You're already in the pound dollar? Yeah. So, big push up. We're sitting in a zone. You guys can see it right here. Look, you see the black line coming across? What are we sitting in? You guys see this right here? That's what we're sitting in right now. Okay. So again, another pound pair that is sitting in a larger time frame supply zone. Okay, so they're all kind of saying the same thing. It doesn't mean that it can't break through these things, but we are seeing something consistent across the board, that we are seeing the pound in areas where it has been previously sold before by, doesn't matter who, but by big money, it's been pushed down before. So kind of consistent story. Doesn't matter if we're comparing it against the yen or the New Zealand or the dollar. It all seems to be in the same position. So again, with a really good CPI number, it absolutely can buck these things, but that's why we keep risk low. Again, just be cautious of that with where we are. I don't know why I drew that up there. There we go. But again, understand this one is a mover. Don't forget, average true range on this one. Again, we are high, but it's up here at 174 pips. So this is one of those pairs that if you're playing it, make sure that you have a good stop loss, because just the anticipation can stop you out on this one. And I wouldn't be surprised tomorrow, especially if we have a CPI miss. I wouldn't be surprised if this pair moves 200 pips today. So just be a bit cautious if you're going to play this one. But again, same situation. High side in a daily level of supply. Again, nice pop. We've seen this pop, and again, push. And again, starting to see kind of a little bit of a signs of slowing, right? Little signs of slowing. Signs of slowing. Glad I can talk tonight. All right, New Zealand dollar. Now, New Zealand dollar has news tomorrow. Remember, that is at 6:45 tomorrow GDP. It is not a Nadex tradable pair, so you guys will be looking to trade it over here. This one pushed just slightly higher. Look, it went just slightly higher from where the base is on the wick over wick on the 4-hour. But when you dial it down to the smaller time frame, you can see that the wick over wick is not as kind of, it's not glaring you in the face. You do see a level of basing right here, which that's kind of what it more or less it went off of. You guys can see if we take the bottom of the zone here, you can see that that's what it bounced off of. So not the cleanest entry in this one. Most people would have got into this one around here when we saw the first pullback at 63.50. It went as high as 63.63. So again, 13 pips higher than where the initial entry is, and it's starting to pull back. Unfortunately, the target is not super far away on this one. Again, if we're using the kind of bottom level here, you're talking about a 30 pip trade total, okay? And the risk in that one would have initially been about 10. So you're just barely, and again, barely if you would have stayed in the trade because it did go out the top, just barely a 3-to-1 risk to reward ratio trade. Now, with this being a 6:45 tomorrow trade, we have the entire European session and we have the entire US session to start looking, before we can really start focusing in on this one. I would not be looking for trades in this right now in preparation for tomorrow night. There's too much stuff that can happen from now till then. Let's see where it goes. Okay. I would actually be really, really excited if we can get some type of a pop up into this zone or this zone based off the FOMC notes. Okay. If we can get that gigantic push up, that would be awesome. I'd love for us to go into the New Zealand news with it already pushed up into a higher level zone, okay? A higher level sell. And again, this one's not horrible. Would really love for us to be up in the 64.08 range. And again, that'll be at 6:45 tomorrow. If we do get up into those ranges, again, that's where you start looking for some type of a reversal pattern before the news, or look for price to be rallying up into that area of news beforehand, about 15 to 20 minutes. And again, position yourself, give yourself a little bit more room on the stop just to handle kind of the chatter back and forth. And then again, look for the news to kind of drive that, from the zone if we get into supply zone. If we do push back down and we're sitting in this demand zone here at the bottom below 63.31, I don't know that I'm going to be willing to jump on it as much as if it was on the top side. Obviously, we're kind of a low in this pair. I mean, if we kind of zoom this one out, you can see it's spent most of its time much, much higher. We are approaching a low. If we are sitting over here, down here at the 63.09-ish area, let's get rid of this. If we are kind of sitting down in here, we are at a low. Technically, it is a buy area, although it's already made an attempt down there one time. So, below 63, that's a very, very low kind of the low rate in this pair. So, but again, New Zealand economy not really super big. All right. We'll see. I'm probably not going to trade this one over probably look at it before news, and that's about it. All right. Dollar Swiss. As you can see, dollar Swiss did pop up into that zone as we mentioned before. Again, this is based off this. It was actually drawn on the 4-hour. You guys can see it was based off the top here. It had a quick strike up, quick strike down again. I'm still urging caution in this pair. I'm actually Quite surprised it is now Tuesday night and we have not heard about any retaliatory strike. As I said before, I do think because it's oil and oil prices are high, a lot of people are getting paid. So it's not like they sent tanks. They jacked the price of oil, and again, the supporters of the current administration like oil prices slightly higher. They tend to profit when oil prices are higher, but I do feel that we'll eventually hear some type of retaliatory marks. And I think that, again, I think this pair, I think it gives unneeded risk in a trade. Just, again, when there's a lot of other opportunities out there that are better to trade. So again, maybe it's me being overly cautious, but I do feel like there will be some type of retaliatory effect. The fact that basically messed up oil for a little bit. Again, you guys know my opinion on that. Now I'm not going to, beat a dead horse on that one, but I'm just urging caution in this pair right now. For me, until things kind of just boil over. I just feel like there's other opportunities out there. Looking at dollar CAD. Now again, dollar CAD. Gotta see tomorrow. We have CPI for that at 8:30 before the markets open. Okay, and again, they have a lot of CPIs: the median, the common, the trimmed. The only one that really matters is this main one. The other ones aren't really as big of a deal. But again, for CAD tomorrow, you have the 8:30, and then you have oil. Oh, excuse me. And then you have FOMC right on top of it. So it's like bam, 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 bam for CAD all day tomorrow. So just understand that CAD will probably whip back and forth. Now, this one took a stab higher. It did fill the gap. It did go right above the gap just by a little bit as well. It's one of those like, and a couple of pairs did that. Had you taken any of those shorts, again, you probably would have got stopped out, especially in this one. It went from 88 up to 99. So it was 11 pips past your zone had you try to take that one. After it started to pull back down again, though, for most people, they would have invalidated. Again, that's a Sunday night gap strategy, not a Monday night gap strategy. So you got to be a bit cautious on that one. But had you been looking for that one to retrace back, which it typically does, again, it did work. It did go past your target. So again, it did refill the gap in the opposite, again, it gapped in the opposite direction we were looking to fill. So it's there. Again, it's sideways. News is absolutely going to jump this thing around. Where we are now with price coming up to here, I'd be looking for, again, I'm going to extend this one across. And I don't know. Let me see. What kind of range we got on that one? It's only 30 pips. It can absolutely kind of take over that area from where we are. It's probably a more valid area here. Probably looking at that downside. So I'll do it this way. There's purple, duplicate, purple up top. Let's see, bring this all the way across. That's probably what we're looking at for news as far as top and bottom. Okay, looking for spikes to go here. So bottom spike, again, it's going to be based off of where this candle kind of shot out. It's located at 133.20. And then downside, you're looking at 131.89 or 131.90. Okay, would be the pop, top, and bottom. Pulled $400 off that Sunday gap fill, and then some off of this one, Ernest, dollar CAD, from here to here. Oh, dollar Swiss. Yeah, I'm just not a dollar Swiss guy. Of this one. Yeah, I just don't like this one at all. Yeah, dollar CAD I think was an easier retracement. Longer, but is what it is. All right, so that's what we're looking for these two zones tomorrow. Again, we could potentially see an up and then a down and then a down and then an up tomorrow, based off of the news of what it could be. So just be cautious of that. Again, 2-hour binaries is the way to look at this one, particularly tomorrow morning early. The strikes are a little bit farther. Again, I'm not exactly sure why for CAD, but it doesn't have the ideal. It doesn't have the smallest strike differential, but again, it's still, you can still, trade this one pretty valid. All right. Looking at dollar yen. Okay, dollar yen will most likely be a big mover tomorrow. There's only so much you can factor in. As you guys can see today, it kind of literally rallied right back up to the gap and then just kind of stayed there. Okay, we talked about this last night. Here's price right now at 22. And then when we looked last night, price at 22 was right here, right below where we were. Didn't have a much movement. And you guys can see this. I mean, we're talking a channel from here to here. We're talking about a 14 pip channel, right? Um, at its peak, 14, and we had one spike up. So we're talking about a 20 pip channel since last night. There just wasn't any money to make in this one today. Obviously, tomorrow with rate cut, rate cut is huge, especially for this pair, just because, again, it is so stock market based, and a rate cut is absolutely amazing. Borrowing costs, again, you want to grow the economy, just drop the interest rates. That's the easiest way to do it, okay? And again, that will kind of bounce this pair around. So I do see some good momentum in this one. Unfortunately, finding good zones top and bottom is a little bit difficult. So we do have something up top, okay? Now we do have this area back up top that we've talked about before. It's been an area that you guys can see we've already bounced off at one time, but it's sitting up here really at what 109.20 would be kind of the upper side. If we want to take it a little bit more of a conservative entry to get more entries, it'd be 109.12. Okay, so that's where we're looking for top side. It is currently what about 91 pips away, so it absolutely can travel 91 pips with a rate range. Okay. Looking on the downside, though, is where it gets a little bit sketchier, right? Let's get some of these out of the way. We're looking for something clear in the same kind of area. Probably down here. I'm thinking that's probably the best little area. It's not even that great. I mean, yeah, it's a 2 candle pop, and it did come and retest the very, very top of it, but it's not like something like this. It's not great. Let's see, how far away are we from that zone? About 160. 160 is far for that to move. Not that it can't, but that's a pretty. Let's see. Yeah, we're only at 60 ATR. Hitting this top zone at 65.70, that's one thing. Hitting the bottom one at 160, that's quite a move. I don't know that we're going to be able to hit that one. It looks like we may only have a setup on the top side. And again, that top side would be the completion of this kind of racetrack to the downside. Again, it's been a slow haul there. But again, no movement. So I think this one we're gonna have to get a better analysis tomorrow morning and see what it looks like. We may actually have to drop down and look at. We may need to switch these three candles or these three charts around. We may need to go 4 hour. We may need to go 4, 30, and 5 right before news and see what we can pull out of that one. I don't know that. Fortunately, those are nice zones up there too. Got a couple nice zones up here for this thing to kind of bounce off of. We got a lot. We got a lot sitting in this 109, and then up at 110.60, and then up at 11.30. So good zones right above where we are, which is a good thing. Worst case scenario, maybe we hope that we can get a pop and start getting up here into these upper zones. Okay, these are nice quality zones up here. You guys can see this was a nice pop, huge movement off of it. This was where the wick, the gap went to. Again, that was the start of all this movement. And again, there's the original gap from back in May 3rd. So definitely some nice zones above, supply zones above where we are. Maybe that's the best bet in this case, because we get a spike in this one and it puts us up in one of these upper time frame, larger time frame zones, and then we can get out of all this junk and stuff. Get all this crap cleared. So maybe that's what we're looking for in this one. But right now, I'm not going to be able to give you one overnight on this one. If I had to make a call, I would say I'm probably a bit more bearish tonight. But knowing how close we are to this, this area up here, I still think 109 is going to be any type of, is definitely a target for us. And again, where we are right now, we're about 80 pips away. So 109 is definitely within range, within striking distance of that with that FOMC cut tomorrow. Okay. Looking at CAD Swiss. I don't think there's anything clean in CAD Swiss. Nah, just a pullback. You guys can see this one went real far down, and it's just pulled back. So nothing for this one. So CAD Yen will definitely be a play for you guys tomorrow morning as well for CPI. Again at 8:30. Again, similar. It did do its bounce. You can see we had a profit target drawn. It did not make it all the way down. It made it about 80%, 85% of the way down before it retraced. I would definitely, if you're still in this one, I would definitely just probably clear it off. Right now, it is just moving sideways. It's done it for what? 1, 2, 3, 4, 5, 6, 7, 8, 9. Almost 40 hours. It's gone just sideways. Hasn't really had much movement. Little pop up, down, and sideways. But at this point, let's see where we can get. Going into the news in the morning, we are kind of between those two zones. Again, obviously top side, I would still be holding, kind of looking at this top area around, around 82? Yeah, about 82 is not bad. And downside, this one doesn't really have a great downside target either. Snooze pop. This one. All right, so what I'd like to see in this one, I don't know that we're going to have enough time. I would like for it to grind back up overnight if we could. If we get closer to this zone, or if we get any type of spike before, news, to take this to short. It's kind of it's just stuck right here, unfortunately. And I'd rather not use a news spike I'd rather not use a 30-minute zone for a news spike. But again, up in the 82 range. Again, we've seen price turn away whenever it's gotten up here in the past. Right here. Again, this one barely grazed 82. I'd be looking at, again, if price can pop up, I'll just draw this. If we can pop up into this zone, I'd be looking for some type of movement back to the downside in that. We'll see where we're able to go with it. Unfortunately, downside, I don't really see anything that calls out to me and says, hey, if price drops to here, this is a great one. I just don't really see anything. We are, again, where we are, you guys can see the last 3 days, they're very, very wicky days, very, very small body days, which I absolutely hate. And unfortunately, with that bit of a pullback, again, it is putting a failure to go higher. It is showing us that we are having lower highs. So it does look like it is changing trend and heading back down again. I do like the target down here. Again, down here at 79.70. Even down at 80 wouldn't be bad if we can get down that far, but it's not typically a one-day move to the downside. Your ATR on a pair like this is 60. Okay. So you're talking about what? 2 days, 3 days worth of movement to go all the way back down to this bottom kind of section here. Okay, and again, it is basically completed the retest at this point, or the retracement all the way back up again. I would like one final push though. If we can get a new spike up, then I'd be willing to take this one short and try to run this maybe for a couple extra days. All right, so that being said, not a lot today. I knew it was going to be dead going into the day. There really isn't a ton out there right now. Tomorrow should give us a bunch more pops around, and there should be a lot more. Unfortunately, doing the analysis after a dead day, going into a day like tomorrow, a lot of the news areas are going to be a little bit funky to find on the 4 hour. And yeah, hopefully tomorrow's news gives us some nice clean levels to start trading at the end of this week and then early into next week. So, all right, guys, with that being said, make sure you give me an exclamation point ticket real quick. By the way, I hit this button, so they have this thing that, they're going to email me when they have the merch store. I was like, what is this? I'm like, there's chart. I'm like, oh, they can get clothes. And I was like, oh, look, customer satisfaction. I'm like, okay, so we can get you guys a keep trading simple, sweatshirt, a little tank top, a t-shirt. Cool. And then we went down. I was like, wow, we can get keep trading simple underwear. Lovely. So maybe we won't put this up there. But yeah, and stickers, I'm absolutely without a doubt doing the salt shaker. Just FYI for the pip chips. Maybe we'll get the the logo. Where is it? Oh, I'll do it when it's closed. Yeah, I have to do it when it's closed. The pip chip logo. Yeah, I'm absolutely doing that one. Getting that one on a mug. And get that one entitled off. All right, so I'll give you guys another 30 seconds to get these tickets in. I kind of despise CAD yen. Yeah. Ernest, there are days that CAD yen is good, and there are days that CAD yen is bad. And unfortunately, last week how we had there was many days of not a lot of movement? Unfortunately, that made that one a little bit funky. And for me, I tend to only look at CAD yen or trade CAD yen when I'm looking to do it for news. That's it. That's the only time I look at it. It's not even in my standard rotation. If it was in my standard rotation, that'd be one thing, but it's not. All right, close this down. Let's see. Only 8 people in the giveaway tonight. So again, we had less people. I will draw the winner. And the winner tonight is James. Wow, James did 2 in a row. Look at that. Look at that. Again, James, you had good odds tonight. You had 12.5% chance. Last night you won it with, I think, 8. So again, last night we were packed. I don't know if you guys realize James turns 200. I know. It's a thing now, right? Yeah, it's crazy. James is again. It was crazy. I don't know if you guys know. Last night we had a maximum of like 24 people on here. Tonight's obviously smaller, not a big mover, but people were out. I don't know if people were just sitting in front of their computers last night or not. But we had 22 individual people chatting last night with 24 people on stream just on Twitch. And then we had YouTube doesn't do as much. I basically use YouTube for just archiving purposes. But on YouTube, I think we had a maximum of like 3 or 4. So we had like 27 people, I think, or almost 28 people on last night, which was awesome numbers, guys. Again, I don't know if doing the webinars is helping or what. I am actually going to do another webinar. So I know a lot of you guys may have missed. Let me give James his. It's complete. Let me give James his stuff here before I forget. Where is he? Go over here. Okay, there we go. What does it say? Oh, so based off the webinar the other day, I'm actually going to do it again. So for any of you that missed it live, it's actually going to be a little bit different of a webinar this time. Again, it won't be out, and I can show you guys. This is what I've been working all day today. Yeah, I can drag it across. These are the different slides that are starting to kind of go in for the parabolic retracement class. Okay, all the disclaimers and things, and again, playing around with different ideas and starting to build the slide deck. I have all the different kind of slides that are going to be kind of coming through. There's a bunch of them in here. I basically have to take the outlines now and the classes and populate these. So that's what I've been working on kind of the last 2 days. You guys will start to see more of that, but once this is done, then you will be also able to purchase that, one with pip chips, but 2 obviously with money, and there'll be actually a webinar designated for it. That'll be something that's new that's up there that you guys haven't seen. And what it's going to do is it's going to give you guys the rules on really how to trade them. I talked about the possible moves. I think everyone in here, you guys have all downloaded the news analysis report, right? Has anybody tried to match that up yet and look for any of the moves? I didn't know if anybody had any questions. I got a bunch of feedback, but they're from people that I don't talk to typically on a regular basis. You guys are the ones that I talk to on a regular basis. I don't know if you guys have looked at it or used it or tried to kind of go into it. Any feedback you guys can give me on there, it's going to be incorporated into the class. Got it up now. James was so focused on the keep trading simple underwear is what it was. He's like, yeah, I got to get me some of that merch. Checking out the pound stuff now. Yeah. And like I said, a lot of those things are averages. So just check it out. And again, they kind of rate how often they miss and things. So, yeah, we'll see. He's like, absolutely. I love those things. I love them. I trade in them all the time. All right, guys. So with that being said, I have given James, James is now an official 2 times winner. Okay. Of the pip chips. And yeah, we're still getting some movement in the pound. So we'll see. I think the pound's going to be moving tonight. I think that's the biggie. I think that's going to be the hidden gem tomorrow. All right. So, I will see you guys tomorrow. I will be around tomorrow morning, for some of the news releases, and then I will try to be back. I'm going to try to be back for FOMC to see if we can get any retracements. Just got it printed. Should have some feedback tomorrow. You printed that thing? Man, that's like 55 pages, dude. You're the man if you printed that thing out. Like I said, I didn't expect it to be 55 pages. It just kept going and going. I was like, no, stop putting too much into it. So, all right, guys, I'm out of here. 10:15 or 10:20. I am going to take off, grab some more tea, and I will catch you guys tomorrow.